please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the cnbc TV 18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me are Anuj and Sonia. Well, actually, sigh of relief. The news that came in from the US late yesterday is that Iran will be allowed to sell its oil even after that November deadline when everyone was supposed to stop trading with Iran. And you can see the beneficial impact it has had on Brent crude. As far as we are concerned, we haven't seen the 72 in probably 3 or 4 months, and that's a very big relief for an economy whose biggest headwind was crude. We should expect this, along with yesterday's largely oversold terrain, to perhaps give us some bit of a bounce up today. I'll leave the technicals, of course, to our expert Anuj. But yesterday we saw some brutal selling in the mid-cap space. On that, this good news coming in could hopefully lead to a short covering rally. Remember, it is not just oil stocks that benefit. It is basically, interest rate sensitive stocks across the board. Fuel is the lifeblood, and therefore we should see a general recovery in stocks, is my hope, that the 72 will bring. But just one negative news that's come after the US markets closed, and that was the results from Netflix. They missed estimates, and that has led to a post-market fall of 13% in Netflix shares. There's a fear in the United States that the FANG stocks, which were the vanguards of the rally in the United States itself, may also have a rough day on Tuesday. It's possible that Indian IT stocks will presage it and we may see some profit taking. After all, they are the best performers in India as well.
Okay, so there are a couple of pluses and a couple of minuses for our markets today. Of course, the plus includes the way crude has moved. But for our own markets, Lata, yesterday the mid-cap fall was really something else, right? I mean, 2.5% knockdown. Anuj, morning, after looking at the texture of the market yesterday, do you get a sense that maybe now, although the headline index may sort of hover around this level, 10,900, 10,800, there could be a lot more damage in mid-caps?
Morning, Sonia. Since budget, this has been my basic thesis that the mid caps and small caps this year are in for really painful time, and you should be moving your money to safety. This year's top priority should be capital preservation. 0 is greater than -10, and in fact, if you had done that, not only would you have saved your capital, you would have actually made a lot of money. The other thing is on this Netflix, and I think I've been having this conversation with Lata about this FANG stock market cap representing over 50%, I think over 60% of overall US market cap. In some quarters, there's a belief that this could be the trigger for a global correction. And I think we'll find out. Of course, it's down 14% in post-market, but let's see how it pans out. Just one point that I want to make about why yesterday's fall looked so big, because it's not backed by data. If you take a look at the point that I want to make about why yesterday's fall looked so big, because it's not backed by data. If you take a look at the DII number yesterday, there was net selling by DIIs after a long time, but the gross buy number is important. The gross buying over the last 1 week, the gross buying number has been anywhere between 3,500 to 4,000 crore. Average has been about 3,700, 3,800 crores. Yesterday, the DII gross buying number was 3,160 crores. There was a drop of 16% in DII gross buying. Now, there's one school of thought which believes that what is LIC going to do now from here on? There's going to be, of course, that IDBI purchase as well. But, especially in the broader market, have the DII started to now say, okay, look, there's no point being aggressive buyer in this market right now, because obviously it's seeking lower levels in the broader market. That's point number one. Point number two, again, just to emphasize yesterday's fall, take a look at the top DAX yesterday. Reliance dragged by 21 points. There was a delivery volume of 250 crores. It was down 40% from previous day. ICICI, yes, there was some significant delivery selling. Tata Steel, Sun Pharma, Dr. Reddy's, there was no aggressive delivery selling. So essentially, this is a market which is lacking buying more than seeing aggressive selling. So it's a buyer's strike right now, which is impacting stocks. Sometimes that's the best opportunity to actually go out and pick up good quality stocks. So of course, the point here is yesterday the CBOE VIX was up 5%. So there's a global weakness which is emerging again, and I would want to see how the Netflix actually does in the actual market today, and the impact of that on the market. But as I said, problem is lack of buying and not excessive selling. I just want to give two more examples. Ashok Leyland yesterday fell 5% on delivery volume of 97 crores. Tata Motors yesterday fell 4% on delivery volumes of 72 crores. It's an index stock. In the past, it's fallen this much when there's been delivery selling of 400, 500 crores. So it's a good time to buy fear into good quality stocks from investor point of view. You make portfolios in this kind of market. You don't make portfolios in 2017 when everything is surging. This is the time to make portfolios in good stocks, but as a trader, respect what the screen is saying. The screen is saying that there's some problem right now, and there's no harm in being short on the market at times where it looks like the market is about to fall. But keep your powder dry and start picking up good quality stocks, because this is a bit of a fear playing out right now, the way stocks are falling on very low volumes right now.
I can take your mid-cap argument completely, but we just to put what you're saying in perspective, I mean, we are only about 60 points from 11,000.
Exactly.
The fall looks exaggerated, but we also got to 11,000 in a hurry. So, we should not lose perspective of the fact that large caps are still at near all-time highs.
Oh, yes. And talking about large caps at all-time highs, HUL will also be reacting, right, to its numbers. I mean, they were in-line set of numbers. The commentary was relatively positive. I mean, 12% volume growth is something that the street will take with both hands at a time like this. So keep an eye out on those stocks as well. But let's take a look at what our wise experts have to say as we head into trade this morning. Rhythm Desai of Morgan Stanley says Indian stocks are jostling weak emerging markets, rising rates, higher oil prices, and election year and relatively rich mid-cap valuations. He says the large cap index has support from an improving growth cycle, strong macro stability, and local appetite for equities. He prefers large caps over mid caps. He says Morgan Stanley likes banks, discretionary consumption, industrials and domestic materials, while avoiding healthcare, staples, utilities, global materials and energy stocks.
Well, let's get to some money market views. Could be important after the crude fall. Bhaskar Panda of HDFC Bank says the dollar seems to be hitting regular breaks on its way up as the index continues to consolidate below the 95 level, and the focus remains on simmering trade tensions, US yield curve. In Indian markets, he says high trade deficit news moved the USD INR pair yesterday. He expects USD INR pair to trade in a range of 68.50 to 68.70 today.
And Bhaskar Panda says the Indian WPI inflation reading for June rose to a 4-year high. He says the benchmark yields have started moving up slowly after the recent correction. He expects the 10-year benchmark bond yield to remain within a 7.8 to 7.85% range for the trading day.
Okay, a lot of talking points as far as global cues are concerned. Here's Mangalam for the world view.
Absolutely. The big headline coming in from the globe yesterday is the sharp decline that we saw on oil prices. So the Brent closer to that $72 per barrel mark. And this after U.S. Treasury Secretary Steve Mnuchin said that there could be some waivers for oil buyers for buying from Iran. So higher supplies, lower crude prices. The other big trigger came in from the moves in the U.S. market itself. The Dow ended mildly in the green, the other two indices in the red. Why did the Dow hold up? Well, because financials did well. Bank of America reported a good set of numbers. So that stock was up around 4.5%. JP Morgan Chase did well as well. Now on to what did not do well. The Nasdaq was down about 0.25% because of the FANG stocks. They declined: Facebook, Amazon, because there were some technical glitches ahead of the Prime Day sale. To Netflix now, yesterday it was lower, but post-market it declined about 14%, and that's because the subscriber addition estimates have been missed for the first time in 5 quarters. Domestic subscriber additions at 0.6 million versus estimates of 1.2 million, while international subscriber additions also fell by about 500,000 people. So that is something we will be watching out for. As far as Europe is concerned, not a big mover out there apart from the FTSE, which moved lower by about 0.8%. And we'll have to watch out for the big meeting that is underway right now, Trump and Putin, for the first summit in Helsinki. Indivior, one stock was up 17% after the preliminary injunction against Dr. Reddy's. In Asia, most of the Asian screen is in the red, apart from Nikkei, which opens after a holiday, and the SGX Nifty indicates a cut of close to 10-11 points.
All right, thanks a lot for that, Mangalam. So that's what the world is looking like. But let's drill it down to the specifics back home. The government is all set to introduce new rules for load capacity of trucks and tractor trailers from today. We learned from sources that the government will hike the load carrying capacity by up to 25% for these vehicles. Of course, we need more clarity, on what the framework of this notification will be. But we did manage to speak to Ashok Leyland's MD and CEO Vinod Dasari last evening on what this could mean for the industry. Listen in.
It is rather confusing at this point because somebody who has bought a vehicle, let's say, for 25 ton, that vehicle has been designed for a GVW of 25 tons. The braking has been designed for 25 tons. If the argument that the government has that they are overloading that much anyway today, well, if they are overloading that much anyway today, then there should be no impact on vehicle volumes, because tomorrow they will say, okay, now you carry 28 tons and that would be all that you're allowed to carry, and it will be very strictly imposed. I find it a bit surprising on two reasons. One, somebody who's bought a vehicle today and somebody is going to buy a vehicle, let's say, after Tuesday, what does somebody who bought a vehicle do? I mean, he has a vehicle for 25 tons. He cannot suddenly get it registered for 28 tons because the brakes and everything have been designed for 25 tons. Even in US, one-axle truck or two-axle trucks have got the difference between India and US is 16 to 18 tons. Here we are going to 19 tons, which is the world's highest. Similarly, on three-axle trucks, we are going from 25 to 28. Once again, US is only at 26, which is the highest in the world. So we are going much higher than the world. And I am not sure our roads can take something like that. First, I think this will cause confusion, unnecessary confusion. I think people will say, shall I wait? Shall I do something? But I think in a week or so, it will all settle down and people will say, wait a minute, I was anyway doing it. Now I will be legally doing it. So let me continue to buy more vehicles. There's no tire capacity in India to do something like this. So that's another thing that we are all puzzled by as to what is the requirement, what is the urgency for this. I'm not so sure I understand.
Just take a quick check on what's happening across the Asian markets this morning. The SGX Nifty is absolutely flat. We've had a rough day yesterday, so let's see how things shape up today. For the rest of Asia, it's actually a mixed bag. Some of them are a tad bit in the red this morning, and the others are doing just about okay. Hong Kong is down more than 300 points, so don't lose sight of that. The Shanghai market is also following suit, so looks like it's going to be a rough start to trade. Our research team is here to give you the list of top 10 stocks to watch for the trading day. So let's kickstart very quickly. Anuj, what are you looking at today? So,
two stocks. One is IGL. There was huge pickup in delivery volumes yesterday, and the stock is showing signs of bottoming out. In a weak market, it was up 4.5% and massive delivery buying in the stock. 60% volumes were marked for delivery. So that's the number one. Number two is Infosys, and that's more of a conviction call here because, 2 days back when the ADR was down about 3%, and yesterday you saw that classical short covering bounce because in India people were short on Infosys. But in second half there was a significant decline. The stock ended 1% higher, but off about 3.5%. And yesterday, if you see the ADR move, it should have reclaimed the lost ground. It was also up only about 1%. My sense is today you could have read on Infosys. As we discussed yesterday as well, the numbers were pedestrian and should not lead to any kind of re-rating on Infosys. Classical double top perhaps at around 1380, 1385, which has been its high. So that could be the red stock for me today.
Okay, we'll hear more about that from Rima, of course. But I just wanted to draw your attention to everything related to crude. 72 is something we have not seen in a very long time. And now it clearly looks like lower tops for crude. I mean, I'm no technical expert and we will pose it to our technical gurus when they come. But it clearly looks like there is a downtrend in crude. And that would be generally positive. I would look at, of course, oil marketing companies and airline companies, which are the immediate beneficiaries, but even banks. This would put a lid. Yesterday, I'm not saying that the WPI number at 5.4% created much ripples. We don't look at the wholesale price index. But nevertheless, those fears will be smothered by this crude number. My sense is that financials and OMCs and airlines should do well.
Okay, all right. We'll keep an eye out on that. Of course, the fall in crude may benefit airline companies, but they've been under a lot of pressure lately. HUL reported its numbers. It didn't look too bad, in fact, largely in line, but no positive surprises this time, right, Mangala?
Absolutely, Sonia. So no complaints as far as the numbers are concerned, but there were no positive surprises in HUL's first quarter numbers. So revenues at 9,500 crores, pretty much in line, a smidge lower than what the street was working with, but more or less in line. The company made up for the minor smidge in their revenue by growing its EBITDA. The EBITDA came in at around 2251 crores. Our poll was 2200 crores. And this despite no penny pinching as far as ad spends are concerned. The net profit absolutely in line with what the street was working with. The volume growth at 12% marks the third consecutive quarter of double-digit volume growth for HUL, albeit on a low base. This is something we will be watching out for. Management commentary was positive as far as demand is concerned. They have some issues with crude as well as competitive intensity. So watch out for what happens, because most of the brokerages, they've downgraded the stock because of the valuations. It currently trades at record high, 52 times two-year forward earnings. So this is something we will be watching out for, how it plays out today.
Okay, so not an outstanding number despite no penny pinching. And that is promoting some soul searching on the part of analysts. Okay, Rima, IT stocks. I know I'm trying to connect to unconnected issues, but bad news coming in from Netflix.
Yes, absolutely. So the numbers came post-market as over there, so after the bell in the US, and they missed expectations on their subscriber growth, both in the US as well as for their overseas markets. So after the bell, Netflix was down 13%, and the expectation is FANG stock. That's Facebook, Alphabet, Netflix, as well as Google will be under pressure in the US markets in today's trade. And considering they were the star outperformers, it could dent the benchmark indices as well. Well, for our own markets, while the Indian IT stocks are largely outsourcing companies, so there is no direct correlation. But if the portfolio investors look to take out gains from the IT companies per se after the big gains, then perhaps there could be a side correction in the Indian markets.
Okay, and with that, we come to the big story that happened late yesterday, and we are getting more clarity, hopefully. Now, Sonia, the change in load factor rules.
Yeah, so, I expect some of these stocks to be under pressure till there's more clarity that emerges on what the final notifications are. Ashok Leyland, Tata Motors, Eicher Motors, SML Isuzu. These are mainly the commercial vehicle makers. Just to put the news on board, the government has decided or will take a decision to hike the load carrying capacity for medium and heavy commercial vehicles by 25%. One, there is no clarity. Two, people may defer purchases until more clarity emerges. Three, the new axle norms means that the same truck can carry more load, which means that demand will fall in the very immediate term. Also, as the MD of Ashok Leyland was telling us, the new norms may mean that the cost of manufacturing trucks may go up because they will have to sort of change, the new capabilities. So the cost of manufacturing trucks will go up, which will be an additional investment for them. There is no tire capacity as well at the moment. We are just showing you what the brokerages are saying. Largely, there is lack of clarity on what this may do to overall demand.
Fair point. So there could be continued pressure. Anisha, some JVs announced by some capital goods makers?
Well, yes, that's where the defense stocks will be in focus, because they've signed a couple of JVs. For example, Bharat Electronics has signed an agreement with the Swedish defense maker Saab, and this is to market the products that they had co-developed recently. Other than that, BEML and L&T have also signed an MOU, and that is to explore the indigenization opportunities in the country. Now, they're looking to export a lot of the co-developed products as well as systems, so these stocks will be in focus.
Okay. Let's get to Sonal now. Sonal, a couple of numbers post-markets looked good.
I'll start with Syntex Plastics. There, the numbers were a little weak. The revenues, they dipped by 12%, majorly because of weakness in the prefab and the infrastructure segment. All this leading to an EBITDA decline of around 30% because margins were lower both in custom molding as well as prefab segment. All this leading to a profit decline of around 47%. Expect some pressure on the stock today. Jai Bharat Maruti on the other side posted strong set of numbers. The revenue went up by 34% and the EBITDA, that also went up by 53%, and the margins, they expanded by 100 basis points. Apart from earnings, there are some other stocks that are in focus. Som Distilleries will be in focus because the board has decided to issue 12 lakh share warrants to promoter group at an issue price of 271 rupees. Current market price stands at around 242 rupees, so I'll watch out for that stock. Adani Ports also will be in focus because Adani Logistics and NYK Auto Logistics have announced a JV for some rail logistics joint venture. This stock will be in focus as well today. Back to you.
Okay, Sonal, thanks a lot for that. Nimesh, couple of interesting block deals yesterday.
Oh yes, Anuj. So the first is JetCat Corp, there some of the influential domestic funds have bought. So Reliance Small Cap Fund bought 60 lakh shares, White Oak Capital bought 13.5 lakh shares, and Indacon Fund bought close to 12 lakh shares. Interestingly, the Japanese promoters sold 1.1 crore shares. But just to put into perspective, this essentially has been sold to make sure that the Japanese promoters holding in Indian entity remains at 75% post the merger of some of the subsidiaries. So just to retain that 75% holding, they have sold this 1.1 crore shares. So I guess the stock will be essentially on the back that most of the influential funds have bought in yesterday's block deal. The second stock to watch is PVR. You track that very closely. Finally, after an 18% fall in the last 4 days, some institutional buying. So one of the FIs have bought close to 3 lakh shares at around 1190. But from a sentiment point of view and the fact that the entire mid-cap is under pressure, I expect this PVR to be under pressure even from current levels. But interestingly, at this level, there is some bit of buying coming in from larger FIs.
Okay, of course, JT EKT India is the erstwhile Sona Koyo steering. Stock fell to 10 rupees, about 4 or 5 years back. There were a lot of problems. Promoter changing now, and it's a 100 rupee stock. So obviously, that's been a big story over the last few years.
Okay, well, let's do a quick recap then of our top 10 stocks to watch. Stocks with positive news flow are IGL, IOC, BPCL, Jet Airways, Interglobe, Asian Paints, HUL, BEL, L&T, BEML, JTEKT, Jai Bharat Maruti, Som Distilleries, Adani Ports and Sunflag Iron. While stocks with negative news flow are Infosys, TCS, Ashok Leyland, Eicher Motors, PBR and Syntex Plastics.
Okay, let's drill it to more stock-specific news. The management of the Malaysian hospital giant IHH spoke exclusively to our channel, CNBC TV 18, and they are saying that they are bullish on India's hospital sector or health sector. The group believes its open offer price is a fair one and that it will pump in additional 2,000 crores in Fortis post the acquisition, possibly through a rights issue.
Given the headwinds that's coming, we believe that this is actually quite a fair price. I think that given the fact that whatever we put up on the table itself is a premium to what the market price is being traded as today. I mean, for those who want to exit, we have given them the opportunity in an all-cash deal. And for those who believe in our story and who want to ride the upside with us, we would certainly welcome them to support us.
Are you going to put in more money once the deal is consummated? How much are you looking at for the ship to really stabilize quickly? So
our estimate is that the company needs probably something closer to 5,800 to 6,000 crores. Yeah. All right? Now, like I've said earlier on, we have also taken into consideration, because in the run-up to the offer, we have also taken into consideration the wishes and also the aspirations of many minority shareholders who said that they don't want to be diluted excessively at whatever offer price we put up, because they want and they believe that with us coming in, the price would be able to stabilize quite quickly. The other 1,800 crores, we believe that after the moment that we remove the effect of the leakage in terms of the rental paid to the RHT, the company's EBITDA will go back up, I think, in a steady state, probably some 500 crores a year. So that, and in terms of the restructuring of some of the deadlines, we would then be in a better position to leverage, up another 1,000 to 1,500 crores. And in the event that we can't do that, we always have the option to issue a rights issue.
Okay, that's of course Fortis. But back to the big story. Oil prices are near 3-month lows. David Lennox of Fat Profits now joins us. David, good morning. Thanks a lot for joining us. It was just about 2 or 3 weeks back that we were wondering whether it's going to be above 80, and now we're talking about below 70 probability on Brent. Your thoughts on whether we have made a high for Brent oil?
Look, certainly at this stage, with the price action that we've seen and the rhetoric that we've seen from various players within the oil market and from some of those outside of that market, that we have seen some weakness in the Brent price. But overall, we do think that there still continues to be somewhat of a squeeze, we believe, on the supply side. And certainly if you have a look at the June numbers that came out of OPEC, you've got to remember that they were indicating that they were going to lift production by probably around 1 million barrels over the course of the months ahead. Well, for June, they only lifted it by about 173 million barrels. So we're suggesting that we're looking towards the oil price at this stage perhaps stabilising where it is now, and then in due course rising higher over the remainder of 2018.
Good morning, David. Now there is a material change because Iran probably is going to be allowed to sell crude even after November. That deadline was in favour of the crude bulls. Now, would you want to change your range? I mean, there is as well, of course, news from Libya and from US's own production from 7 major shale formations, which are expected to rise by 143,000 to a record by August. You know, putting the new data that we have, would you want to change your range? You know, when you last spoke, you said 74, 84. Do you think the range could now expand to probably below 70?
Look, at this stage, we're certainly keeping our range at, for calendar year end at between 74 and 84 for Brent. If you have a look at those particular circumstances where we're seeing production coming on, yes, certainly the US, we've seen over the course of all of this year, domestic production rising, and over the 12 months, it's added probably about 1.7 million barrels to domestic production. So that's certainly been a very, very strong headwind. And if you took that production away, in fact, the oil price would probably be sitting at closer to $100, not where it is at the moment. So that certainly has helped the oil price be in terms of sustaining any rallies. So overall, we do believe that production is still squeezed. Yes, we expect Libyan production to come and go. And yes, if we have a look at the last sanctions that were placed on Iran, we saw oil coming out the back door. So it's going to be no different this time round. And we do believe that with that in place, yes, we're certainly not going to see the oil price at $100, but we do believe that our $74 to $84 range still looks quite achievable over the rest of this year.
Right, we'll leave it at that, David Lennox. Thank you very much indeed for joining us. So this is still seen as, by David, as perhaps just a transient phase, and 74 will come back. But, you know, there is a technical view which says that Brent has taken out what is called a top neckline at 72.45. And once you go below that, it could go to 65. But we will leave that to our technical experts.